We are unpacking the latest monetary policy committee decision made from the Monetary Policy Committee. The South African Reserve Bank listed before the break, just announcing, as was expected, that rates here in South Africa, the repo rate are falling to 7.5%, effective midnight, I believe. The governor had some interesting things to say about the assessment of the economy. Of course, this was the first meeting of the year where we got to hear how the SARB was thinking about the economy, about interest rates and about inflation, just given the new things that we are having to evaluate right now, particularly on the policy front. If I can just run you through some of the things in terms of the economy, the SARB saying that they assessed the risks to the economy or economic growth to be balanced. Speaking about some of the growth prospects in South Africa's external partners, the likes of the US, where the SARB did assess growth there to be good, a little bit weaker over in Europe, and just reflecting on the fact that we had some weak growth numbers coming in the third quarter, although the South African Reserve Bank saying he expected, or the governor saying that he expected South Africa's growth to rebound in the fourth quarter just as a result of the agricultural sector normalizing. It was a big dragger on growth in the third quarter, and also stronger household spending impacted by tailwinds from lower inflation, as well as the two-part system. One last comment on growth in terms of the sectors, mining and manufacturing, it seems still not back at pre-pandemic levels, and a lot of our growth right now being driven by what is happening in the tertiary sector. On inflation, however, the South African Reserve Bank saying that the outlook for inflation is assessed to be on the upside, while near-term inflation is looking pretty much contained. It's the medium-term outlook that faces material risks from the external environment. And I think one of the most interesting things that did come out was the review, scenario planning that the SARB went into regarding the external environment, most notably tariffs. The governor talking to us about the trade war scenario in which a 10% tariff is implemented, as has been communicated by US President Donald Trump, and a retaliation from other markets is forthcoming as a result of the implementation of the tariff. The governor of the South African Reserve Bank saying that in that scenario, we could see the rand shooting to 21 rand to the US dollar. If we actually look at the rand picture right now, it wasn't very much changed by the picture and by the outcome of the decision earlier on. But 21 to the US dollar is quite scary from the current levels that we are seeing right now. Of course, in the scenario of a trade war, inflation seen at around 5% and slightly higher interest rates. Different kind of scenario in which South Africa actually gets its act in order, delivers on some of its promises to reform its economy structurally. The Reserve Bank saying that in this scenario, we could see a growth outlook of around 3%, in which the SARB would have a little bit more room to give consumers and businesses alike a little bit more relief on the interest rate and borrowing cost front. Those are just my key takeaways, but let me bring in the experts to share theirs with you. Patrick Buthelezi, economist over at Sanlam Investments, as well as Vishal, Rama, Quantitative Analyst at Prescient Investment Management. Gentlemen, to the both of you, thanks so much for your time. Vishal, perhaps I want to begin with you just to give us the market reaction, because I just feel like there was a lot of noise this afternoon. In fact, as our governor was speaking, the governor of the European Central Bank was also speaking and also made a call on the latest rates decision there, 25 basis point cut as expected. I know we are still waiting for US weekly jobless claims. They could have come out while we were listening in on what our governor had to say, as well as the latest reading print from the US in terms of GDP. So a lot of noise. Contextualize the noise in terms of the reaction of the fixed income market, the bond market, to what Reserve Bank Governor Lesotho had to say.
Yeah, sure. Thanks for having me. So yeah, look, I mean, as you say, a lot of noise going into this MPC meeting. However, we've seen a very muted reaction from the bond market, right? Same for the currency market, as you say, right? Been fairly flat. It speaks to how this cut was already priced into the market. We saw, if we looked at the FRA curve going into the meeting, 25 bips was priced in, hence muted reaction from the market. I think it's important now to see how market reacts to the communication that the SARB put through in terms of, I mean, the tone from the governor is fairly hawkish. So yeah, we'll wait to see how that now translates in the market, and we'll see how US data comes out tomorrow and take from there.
Sure. There's a lot of digesting, I'm sure, still taking place within the various trade rooms and investment halls. Patrick, give us your take here. As Vishal said, a muted reaction in terms of the currency. It was expected, but perhaps what wasn't expected, particularly from my layman point of view, was the division in terms of this decision. I mean, you had two MPC members saying that actually rates should have stayed as they are right now, notwithstanding the fact that we have seen inflation coming through, and notwithstanding the fact that some argue that this economy locally could do with a whole lot more stimulus. But your key takeaways from what the MPC did deliver today, and what stood out for you?
No, I think for me, what you were just mentioning was very interesting, the division. I mean, looking at the numbers, for instance, the statement for me sounded a little bit hawkish, but if you're looking at the numbers, for instance, inflation forecast and including economic growth forecast, those numbers didn't change much from last time. So you still have inflation this year just below 4%. Next year, inflation was kept at 4.6%, and then year after it's around 4.5%. So the focus is still more or less the same, but I mean the tone of the statement was relatively hawkish. I think what may have influenced even the other two members who voted for a hold, I think, is what happened in the US, which is also reflected by the scenarios they performed looking at the impact of trade wars. I think we are in an environment of heightened level of uncertainty. So I think for central banks, they want to take it as easy and be more cautious about how they approach this cycle. But what was interesting was that the governor indicated that the policy stance is still restrictive, so which means there's still a little bit of a room, but I mean the scope is very limited. You also indicated that even in the US, the scope for cutting rates is limited. So I think we are getting close to the bottom now.
Yeah, he did make reference to that. I mean, what really stood out was how concerned it seems he is this time around with what's going on outside South Africa as opposed to what's going on inside South Africa, although we've got our own issues, and perhaps you guys will touch on some of the nervousness perhaps that's being aroused by the GNU seemingly not holding strong as many had initially hoped. But I mean, he used words like a challenging global environment, material risks from the external environment, a uncertain global outlook. And I don't know if you were looking at his emphasis, but it seems like he took a bit of a pause every time he was making reference to what was happening outside our land. And he did make reference to the fact that over in the US, although we do see growth stronger than Europe, we have seen a paring back of expectations when it comes to interest rate cuts. So let's talk about where to from here, gentlemen, just based on what we have heard and perhaps based on market pricing. Vishal, maybe I'm putting you on the spot here. Maybe you guys are still telling the numbers over at Prescient and also your colleagues in the industry. But what are your expectations regarding how much more relief this SARB can give, given its worries about the external environment and its impact on us here locally?
Look, I think for sure, right, there is definitely probably room for the SARB to possibly cut rates, but I think that window now is sort of narrowing ever so more as we go forward in time. You know, as you already mentioned, from the US, you know, President Trump has been talking a lot about tariffs and taxes that you will implement, which the market expecting to be quite inflationary. I mean, it might not necessarily be the case that inflation does come through, but the market has sort of priced it in. That then means that inflation sort of might rear itself up, which means that the SARB needs to sort of keep rates where they are right now. Can't envision a hike right now, given that rates are quite high at this point in time. But yeah, look, I mean, I think it'll be data dependent as to how the SARB now look to go and cut rates in the future. There's possibly room for one more cut just before anything does happen further from the US, but yeah, we'll wait and see.
So you're saying one. Patrick, do you see a room for one? Because, I mean, some people are not even talking about any, and others are even so bearish, they're talking about the possibility of us putting this cutting cycle on pause and potentially talking about rates going in the other direction. How many do you see perhaps still left in the system?
Yeah, I think if you're looking at their QPM model, which is a guide for the policy direction. So the QPM, I think it touches a low point of about 730, I think around about 730. So which means there is a little bit of scope for at least one, I mean, judging by what's produced by QPM, at least one interest rate cut. But I mean, this depends on a number of things. Because I think the scenarios that the governor highlighted, I think are very important because trade war, I think it present a downside risk on interest rates. So it means interest rates may increase or may not decline any further. But on the positive side, I think the second scenario that he highlighted, I think is something that is very positive and is something that we can do as South Africans, just focusing on implementing structural reforms. Because when you implement structural reforms, then you improve your supply side. And when you improve your supply side, there is disinflationary. Like, for instance, we have electricity. Not having electricity was putting pressure on the supply side. So improving implementing structural reforms is something that can help with inflation, which can allow the SARB to ease further. But the neutral rate there, the neutral rate nominal is about 7%. But up to 2027, looking at the QPM model, it suggests that interest rates will remain above neutral for a while.
In terms of the QPM model you're making a reference to, the forecast, the bank speaking specifically at around 7.25% in the next few years. So that, as you say, suggests perhaps one more 25 basis point cut, which leaves rates at an elevated level in this economy, a higher for longer, so to speak. And I suppose, Patrick, I'm coming back to you here in terms of what this means for the economy's ability to grow, notwithstanding the comments around structural reforms, which I'm hoping that we'll get time to get into as well. But higher for longer for the economy means what, sir?
Higher restrictive rates, what it means is it constrains the economy. But we are in a patch as South Africa, we are in a patch of implementing structural reforms. And I think that in a way is something that can, in a way, counter that. And also the reason why interest rates are expected to remain higher for longer is not a South African problem, but it's a global it's a global problem, because remember, we are also competing for capital. So if we cut aggressively while others are not cutting aggressively, we may not be able to attract capital, which we need because we don't have enough savings. So we need capital to grow the economy, to invest. I think keeping interest rate high for longer is not a South Africa specific problem, but it's a global. It's a global phenomenon because of this high level of uncertainty.
Vishal, so in this environment of uncertainty, I imagine prudent risk management involves a whole lot of diversification. As Patrick has said, it's not a SA-specific environment whereby there are risks about inflation and the impacts on ultimately monetary policy and the global outlook. We're all in this together, as it were, que sera, sera. Does South Africa still look investable in your view? And I know that you look at the fixed income market. I know you look at the bond market, which did pretty okay in 2024, one of the best performing asset classes after property. In an environment of uncertainty in which you as investors advocate for a diversification, how does South Africa stack up amongst its EM peers?
Sure. So, I mean, yeah, as you mentioned, bonds performed quite well last year. I mean, one of the best asset classes in SA. Um, how it stacks up against the peers, I think quite well, right? I mean, I think by rates staying higher for longer, it actually encourages investors to sort of invest in SA. The reason I say this is because what it means is that the SARB are serious around keeping inflation in check, which is, as an investor, is quite pleasing to know because it sort of it sort of ups your confidence that the SARB is sort of that they're sticking to their guns and to their mandate, and gives you more confidence that that they are trying to do things for the country to keep things under control, which means that you can get some value at the back end of the yield curve, given that naturally your inflation risk premium needs to be adjusted lower because you can build confidence that the MPC is sort of trying to stick to the guns and bring rates down, sort of keep inflation under control. I think also adding to that is that by keeping rates higher for longer, it's sort of, I mean, the SARB have sort of flirted with the idea of shifting the band lower from 4.5 to 3%, right? So, and that we know is really good as an investor, because that naturally means that the back end of the yield curve needs to naturally come lower by 1 or 2%, right? So there is definitely value investing in SA, and I think we stack up quite well against the rest of the EM complex.
Patrick, I mean, just looking at the equity market, it was wobbly a bit. It has held its position in the positive. Perhaps we are on course for the third positive close this week. But it is interesting to see a kind of a repricing in most of the indices right now. In fact, the only indice that is kind of flat at this present moment in time are industrials, and that's literally flat. In terms of equities, again, a similar question to you, because it was a good year for SA Inc., for most parts of SA Inc. in 2024. Does it stay a good year in 2025 against the external backdrop? And also maybe using the proviso that the GNU, some of the rattling that we have seen there are regarding a dispute around the expropriation bill. We haven't even seen how they're going to deal with NHI. But in the event that the GNU is able to hold together, do SA equities also make a compelling investment case? And that question's to Patrick.
Yeah, yeah, yeah.
That doesn't sound convincing. Your yeah doesn't sound convincing.
Yeah, no, I guess, I mean, with equities, it's more about economic growth. It's about, I mean, it's about the economy. So the ability of the economy to continue to improve from here. And I mean, there are a lot of risks as we have discussed, and also given where the market is. I think there are risks.
Again, I'm not convinced, but certainly a wonderful place for us to leave it and pick up conversations on another occasion. I'm sure there's plenty to talk about, but I do hear your argument about it is about the economy. The companies operating in this economy need to be operating in an economy that's growing so they can make profits, so that they are a little bit more investable and certainly deliver the returns for shareholders by way of dividends. But gentlemen, we'll leave it there for now. Catch up with you soon, I am sure. Thanks to my guests today, Patrick Buthelezi, economist over at Sanlam Investments, as well as Vishal Rama, quantitative analyst at Prescient Investment Management, for their first initial take on the first MPC decision from South Africa's Reserve Bank a little earlier today.